Siemens says weak demand for factory automation is hitting returns and revenue. Bloomberg's Guy Johnson spoke to the CEO of that company. Take a listen.
It was driven basically by another very strong quarter of smart infrastructure. Our electrical business grew by 21%, but we also had a very strong software business. The underlying the software business was very strong, but we also had a couple of wins, large wins. They don't repeat in that size again, but this helped quite a bit also in drive our top line and bottom line as well.
So some fairly lumpy numbers this time around, which probably aren't repeatable. You have those stuck to your guidance for the full year. Given what you've just said, given what you see in the world at the moment, how predictable is the business though right now?
Well, yes, we confirm our guidance, our full year outlook for the growth. We will end up at the lower end though. And we also confirm on our EPS guidance. The same holds true for our businesses. Regarding DI, we see their profitability for the full year on the lower end, for the SI on the upper end. So coming to the predictability, it's really the biggest element which we have here is that over the last 3 years, the automation business was growing tremendously fast. And this ended up in quite a bit of stocking in our distribution channels. And this stocking effect has to go down. You have to destock on the one side and the market has to pick up on the other. This is the unpredictability. How fast does that go? When will the market pick up? We see a certain light in chemical industry, also in China, which is a leading indicator, but this is not really the momentum we need in order to really grow there. Therefore, we still have a muted market for automation. It is a temporary effect, structural. We believe this market keeps on going because there's a demand for higher automation and digitalization in the whole industry.
Right, but just trying to figure out when that happens is proving difficult. How big a factor is China in that thinking? You've talked about maybe China recovering next year. Looking at the latest numbers we see out of China, is that still your thinking as well? Do you continue to believe that we do see a recovery next year?
Yeah, that's still the assumption which we have. We will see, our assumption is still that we still see a weak Q4 and Q1, so until the end of the calendar year. And then let's see. We do not believe that this is a kind of a fast pickup in the Chinese market. It will pick up slowly, gradually. It depends really on the one side on the domestic consumption in China, so the market itself, how it's growing. It depends also on the global markets. Remember, China is a very strong export market, so in the whole economy. And it depends also how fast will China go through their reduction of the GDP share coming from real estate. This is something that really holds them back. All in all, China is the second largest market for us, and it will remain this market, and it will come back to growth. It might take a little bit structural-wise. We don't have any doubts.
The story over the last few days has been huge debates around whether or not the US is heading for a recession. Do you see any indication that the US market is heading for a recession? What data are you getting? Well,
I mean, on the one side, Inflation Reduction Act is the right thing to do in order really to attract value added to the United States. The money is not going that fast to the market, so we see a slight pickup, but not really that impact what we would hope to see. On the one side, on the other side, I mean, ahead of the elections, obviously maybe the market is a little bit muted. But all in all, the United States was always a market which was quite resilient, was acting very fast, and we believe that this is a market which is also driving. This was now the overall perspective. If it comes to our markets, where we see the demand for digitalization, for automation, we really believe that this is a high growth market for us, exceptionally high. Why? You have labor shortage, you have high salaries in the United States compared to others. If you want to bring manufacturing back, and this holds true for the United States, maybe also for other surrounding countries, then you need a high level of automation, digitalization. Last point, AI is driving a huge demand for data centers, and electrification itself is taking a huge momentum. You see that in our smart infrastructure numbers. This goes on. This is a super cycle. It will go on. So very strong business there. Last point, we are one of the strongest players in the United States if it comes to trains and signaling. and we play that card as well. And you see our last order for high-speed trains for United States.
Yep.
That's just one element in it, and this goes on.
Okay, Bloomberg's Guy Johnson there speaking to Siemens CEO Roland Busch.